Thank you so much, Preston. Are there any questions before we move on to the next session? Okay, great. I think, the consistent theme is to really take the continent to the next level. There's a lot of rethinking that is required across the various areas and capabilities. And the next session really focuses on how we can rethink and develop new models in order to attract financial investment, specifically for affordable housing. And to moderate the session is Faruk Aliyu. Faruk Aliyu is based in Abuja in Nigeria. He's the Managing Director and Chief Investment Officer of ARC Capital, which is a venture fund in Nigeria with assets under management equaling to $75 million. He is also the director of Shelter Suit and Hotels Limited. Ladies and gentlemen, allow me to welcome Faruk. Thank you.
Can you hear me? All right. I think his introduction made me seem far more important than I actually am. I'm actually here representing Urban Shelter, which is one of the largest private real estate companies in Nigeria, with diverse interests: real estate, power, brick manufacturing, and a few other things. Once upon a time, I was a Excel nerd. How many people in the stands are familiar with spreadsheets, Excel, Google Sheets, anything like that? All right, nice. So we have some people. So they've given us a very thick topic. Well, we will talk about that, but then we'll try to make it a bit more broad. It's after lunch. I know people are tired, so we'll try to make it a little bit more exciting. So my name is Faruk Aliyu. We've got a bunch of great panelists here. Unfortunately, one of them isn't feeling well. Prior to that, we had the entire continent, north, south, west, east covered. But we'll do well to fill in the void. I'll hand over to Tola, and then we'll just go to the next person, and each person, can introduce themselves. So Tola, please go ahead.
Thank you, Faruk. Can everyone hear me okay? Fantastic. So my name is Tola Odukomaiya. I'm an investment director with GuarantCo. GuarantCo is part of the Private Infrastructure Development Group. Within the group, we've got different companies addressing the funding at different points in the life cycle of an infrastructure project. So we're the guarantee arm, and what we try to do with our product is to crowding local currency funding into infrastructure projects. We also look to de-risk these projects for investors who have pools of capital to invest, but not necessarily conversant with the risks inherent within these structures.
Hi, I'm Mostafa, the co-founder and CEO of Nawy. Nawy is a prop tech company in Egypt. I think for context, we started out as a listing platform with a brokerage arm. But beyond that, we got into solving or improving the mortgage situation in Egypt, as well as the investment situation. So mortgages in Egypt are less than 1% of the whole real estate sector. And access to the preferred asset class, which is real estate, is widely limited to people who have wealth, which is, again, a small percentage of society. So for this session's perspective, those are the kind of topics we'll be focused on discussing.
Okay, can you hear me? Yeah, it's okay. So I'm Julien Fouilliart, so I work for a company called Bureau Veritas. Bureau Veritas is a global quality assurance technical partner. We are 80,000 globally, 4,000, a bit less than 4,000 in Africa, 30 offices in Africa, so very local. And our job is basically to provide quality assurance across projects, from feasibility to design, construction, and operation. So I'm looking after the building and infrastructure market for Africa. What we do is to help developers, investors, to ensure value for money in their asset and in their development. And this is, I mean, then we will link it. So not from the financial world, but here we want to help investors to actually de-risk and ensure, as I was saying, value for money in their project from safety, quality, and sustainability point of view. And we see that some of the line of finance can be linked also now to sustainability and how we can leverage green finance. So yeah, that's for me.
Awesome. All right. So before we get started, I think it's always important to have a uniform definition in terms of what we're talking about. So the topic is the case for sophisticated financial models to drive investor interest in affordable housing. So the first thing is, what is affordable housing? Julien, how would you define affordable housing?
So obviously the topic is a bit more how we finance the affordable housing, but if you bring it back to what's affordable housing, you have to consider obviously how you finance it, but also the cost of construction is key, because if you have access to finance but your cost is very high, we see a lot of stress on construction materials, maybe sometimes some lack of policy or a standard, what's affordable housing towards the state. And also Africa is very different. When you say affordable housing, income is very different. I was reading that 74% of people in Africa earn less than $2 per month. So how do you manage to provide affordable housing to also the people that really needs it, and then how you address also maybe the low middle class? So, I mean, maybe there is not a definition, but it's very adaptable depending on geography. Yeah.
All right. So in the context of what he said, I think the U.S. housing, the U.S. Department of Housing and Urban Development HUD, generally the general definition is a household that pays basically 30% of annual income. That's if it's going towards rent or a mortgage, and then you factor in some sort of multiple of that for what a purchase price would be. So to put that into context, in a place like Nigeria, where I'm from, the minimum wage is under $100 a month. So that's, people pay pretty much $100 for the year towards housing, to put that into context, right? So the other thing is, if we say financial models, Tola, what do we mean by a financial model?
Yeah, so, traditional financing, you've got equity, you've got debt, you've got all sorts of models to help finance infrastructure projects. So within affordable, obviously across each of these different sectors, you've got different risk appetites from different investors, as well as risk inherent within the different sectors. Affordable housing is one where you've got investors who, for some reason, perceive it as more risky as some of the other traditional infrastructure sectors. So what we're talking about here is financing structures that help crowding those investors into affordable housing in this case. So, for example, in our case, what we use to particular effectiveness is the use of guarantees. There are pockets of there are a lot of the big pockets of capital within Africa, right? Whether you look at the banking market or particularly the capital markets investors. You've got pension funds, you've got mutual funds, insurance companies, etc., that have capital to deploy. The problem with some of these investors is that they're not particularly keen on the risk that they perceive in affordable housing. So what we do is we wrap that risk with the use of our guarantees. And what we tell them is it's an on-demand, irrevocable guarantee. To the extent that your borrower does not pay you back, we will respond, pay you out, and step in. What we hope to achieve with that is to crowd in the capital, get them doing one or two projects, understand the way these projects work, and then get comfortable with investing in this asset class, basically, so that with time, we have less of a role in these markets, and these markets can then fund these projects.
All right, awesome.
Let me just jump in there and elaborate on that from a consumer perspective. So exactly what you're talking about in terms of guarantees, I think in many African countries, we're going to find that the process of doing credit risk assessment, for example, is very, very difficult. And banks and traditional financial institutions want to have a very clear metric against how they're going to get their money back. So one thing which we've done is we've acted as kind of the intermediary between the two. where we take assurances in actually taking ownership of the house and allowing people to make payments. And once the full payment is made, then the house ownership is transferred over. And we're obliged to do that. Then we take these contracts and sell them off to banks with reassurances to them that we will fund and we will leave money in escrow in case there's any delinquency or lack of payment on the client's behalf. In this context, what also helps out a lot is that if this client does default and we still have the ownership of the house, as a company that deals in real estate, we can very quickly resell that house again while having a decent amount of buffer on the price to make sure that we don't get knocked out in that purchase. So this way we kind of killed the issues through the chain, because if the client was just talking straight to the bank doesn't want to carry real estate risk, the bank doesn't want to carry personal risk, because they can neither trust the property, its value, nor can they trust the person to make those payments. So by being there in the middle, creating that financial model that allows one way with the customer and another way with the banks, we could solve for that issue both ways. And that gets banks buying debt and it gets clients into housing.
Awesome. So now that we've gotten that out of the way, I think we have kind of a basic definition or understanding of what we're talking about. I don't want this to be just us sitting here talking. If anyone in the audience has something they want to add, please raise your hand. I don't want to wait till the end for questions. I want it to be interactive, and we will get to you. So Mostafa, kind of piggybacking on what you said, what do you think, given that people see real estate as a solid asset class, what can be done to make that investment more attainable?
Sure. So I think often we talk about housing as a place to live, but in economies where inflation is so incredibly high, FX is changing so quickly. People want to put their money into real estate as an asset class and as a store of wealth. And it doesn't matter whether you're someone who's earning $100 a month or $1,000 a month. You always want to try and leave something for the future. And what we try to do is create the asset class of real estate in a way that's fragmented and divided so that people can buy some of the best properties that have great returns with fractional ownership. So the idea here that we presented is we go out again as a real estate company. We can select the best assets in the market. We have the data. We know what's there. We curate. We source. We actually buy the properties. And then we sell them in very tiny pieces so that anyone who wants to invest in that asset can afford to do so. Traditionally, many of these people would put their money in gold or in anything that they can find, livestock. So people who want to keep assets and tend to see real estate as the preferred asset class. Okay. So in that context, we've created this sort of product.
And so that applies to affordable housing?
That applies to affordable investment. So the idea here is that many people want housing for investment purposes, not just for living.
Awesome. All right. So
I think there's a question.
Sorry, go ahead, sir.
Hi, thank you. Just a quick question about the model. Your own source of funding, is that local or is it local and international?
You're talking in the sense of for the partial ownership component or for the mortgage-like model? For both. So first, we have equity investment. So we've raised funds as a prop tech company. So we have equity in the business. But the model we have, for example, when I was talking about buying the house or mortgaging the house to a client, we hold it on our books for a second and sell it off to financial institutions within days. So effectively, the equity we have in the house revolves very, very quickly. And from that profit which we generate, we create an escrow account to give the financial institution comfort that if there's any delinquency, lack of payment, they can draw down from a collective escrow on all these transactions we have with them. And hence, they're not feeling the pain of the delinquency, and we are on the other side getting the benefit as well as creating the profitability. So we don't carry that debt. In the second solution, when it comes to fractional ownership, we effectively make a down payment on a house, And then we recollect that down payment very quickly as soon as we put it up on our website and application. So people pay to take that, and then they actually pay us monthly to cover all the monthly installments that need to be paid for the future. So we don't carry any equity risk there.
All right. So Tola, you are.
There's another question.
Okay, don't worry. So, let me get to Tola, and then we'll circle back. In terms of financial indicators, what does it need to look like for you guys to step in for, let's say, a 500 home affordable housing project? What would something like that look like?
Okay, so for us, we've got a bit more leeway in terms of returns that we're looking for. So being funded by a few G20 governments, our focus is more developmental impact, basically. So from that perspective, we look more towards the metrics around that, basically. So what we like about affordable housing is that not only just, I think SDG 11 is the relevant sustainable development goal, not only just that, but by virtue of the asset class, you're touching on a few other spots, basically. So for example, job creation, in terms of the jobs created around construction, etc. You're looking at a sustainable urban development, because we will only invest in projects where either they're looking at IFC Edge, they're either IFC Edge certified projects, or they're looking at that, basically. And what that does is it gets people thinking about all sorts of stuff around access, around how you build the houses to consider all users of that. So whether it be women, children, people who are challenged, disabled people, etc. So we look at all those metrics, and then once we get comfortable from that perspective, then we start looking at, again, you mentioned the question earlier on, affordability, basically. What is affordable housing? And one particular metric we do look at is housing that is affordable to 80% of the population within a given country, basically. So that for us is what we focus on initially before we get into the credit and obviously the commercial viability of these products, basically.
So is it fair to say that it's less return driven and more impact driven? If so, is that on the affordable end or across the spectrum of where you guys operate?
So that's across the spectrum where we operate, basically, and that's us in particular. Within these projects, obviously, we're co-investing with other partners, whether it's equity side or even associated debts, basically. And they obviously have a different way of looking at things and getting comfortable that these projects are commercially viable and they can make a return on that, basically.
Okay. I haven't forgotten about your question. I want to get Julien on board here. If we could hear, how important is titling, registration, and certification in terms of signing off on a project, quality, etc. How important is that for affordable housing projects?
So first thing, and maybe speaking about an additional, if you speak about volume creation of affordable housing, you can take the example of Kenya, we were discussing it before, where there is the ambition to create 250,000 affordable house per year in the next 5 years. This is backed up by the IFC, so it's a different model where we go in volume. And again, here green financing is leverage. You spoke about the EDGE certification, so IFC will require that all the housing will be certified. And when we speak about affordable housing, when we say sustainable, if we include the sustainable component, is the green aspect, but also the resilience aspect. Because we now also, it depends obviously on the financing model, but you want, with the global climate change, to ensure that the asset will be there, will be functioning, and the overall planning and modeling would be right. So this is on one aspect on the green financing. Regarding, I guess also the government needs to put also part in it in terms of policies. You need to help the investors, help the builders have a standard regarding construction, or regarding the financial aspect as well, but also the lead time. If your construction permit takes 3 or 4 months, to get. So I think the administrative process needs to be there, and it must be a work hand in hand between the public and the private.
Okay.
Either on the finance side, but also to create the environment that will really make it easy and really pass all those constraints that you may have administratively, construction import of material, etc. So for the investors that takes the risk.
Okay, thank you. Sorry, sir. The question you had?
Yes. Hi. That's for Mr. Mostafa. The product itself, for the part ownership, what product is it? Is it an investment certificate? What's the legal structure around it?
Actually,
the second part of the question, sorry.
Yeah.
How do you market it? You said you post it on your website.
Yeah.
Actually push for it. Do you feel like there's more appetite from institutional investors buying in bulks or individuals buying?
Sure. I think two very very good questions. So first, the product as it's designed today, because of the regulation on crowdfunding isn't really yet out. So the way it's currently structured is actually in ownership. So we are selling a piece of the house to a certain number of people. So the contract is a buy-sell contract. That's how the structure is. With the rights to exit, because the idea here is an exit for everyone, within a certain amount of time and within a certain level of return. So it's a buy-sell with that as an exit clause so that we can actually execute on the investment element of it. As it moves into the future, it's likely to turn into something more, can turn into also, a secondaries market that looks like a stock market for partially owned real estate and other pieces. Second question, as of now, again, we are very cautious in scaling this out. So because of the regulatory implications of it, we've launched it in sort of companies on a B2B level. So companies provide their employees the option to join into this investment class. And we're rolling it out bit by bit. But so far, like once we put something out, like we announce it's coming out, the next day it sells out in 20 to 30 minutes from when it's posted. So it's still in its early days, but the appetite is huge from what we see.
Yes.
So I have two questions. I think the first is more of a comment related to your point about the 30%. So the first point is around your definition of affordable housing and the 30% of mortgage, of payment for mortgage. I think based on some of the research from FSD Africa, this 30% is a bit too high. I remember that some of the kind of stats from Kenya and from other countries, I think it was more towards 15 to 20%. And I think related to that, because we know that in Africa, there is a lot of focus on incremental housing. So my question to the panel is, to what extent do you consider that as part of your kind of products? That's the first question. And the second question is about Julien's point about IFC Edge. Again, we know that there are some shortcomings, and part of that is that it's very expensive, the certification itself, and in Africa, you don't have like certifiers and all of these challenges. There were some kind of conversations also around whether it addresses other issues of social aspects and so on. And again, my question is, to what extent do you see a consideration of any other certification rather than the edge? To what extent do you see that as something that might be also kind of contributing to the more affordability of housing?
All right, so the first question was
on
related
the percentage,
to...
I can comment on that. I don't know if it answers the full amount, but for us, the way we look at it, when we are asking for people, we actually ask them to declare their income, and we ask them to declare their marital status, family, neighborhood, schools, what kids go to, and so on. And the way we assess isn't based on percentage, but we assess based on the income that they have would there be enough remaining for them to make payments as per the payment schedule we're going to put together? So if they have a high income and this is 50% of their income, that's still good. And if they have a low income and even 10% wouldn't be enough, then we don't accept. So when we're looking at this and credit risk checking the clients, although we have a fail-safe in the financial model we built, we don't want people with delinquencies, but we don't look at it like a debt-to-burden ratio as banks would. We look at it more practically as, will you have enough on the side to be able to make that payment that you're proposing to come and join or not? I don't know if that answers the question, but that's how we look at it.
And as I said, that 30% definition is based on the HUD, the U.S. Housing Department. So similar to what Mostafa said, places where incomes tend to be higher, you can afford to have more of your income go towards housing. So you're absolutely right. In the context of Africa, where incomes are lower, putting 30% is going to be more challenging, right? And which makes this even more challenging because you're now talking about a lower percent of your income, maybe 15, 20% going towards buying a house. I don't know what sort of financial models you look at to make that magic happen, but it's financial gymnastics. Sorry, we'll get back to you, Tola. I think the second question that she had was directed to Julien.
So second question was affordability of the certification itself. You have a wide range of green building certification globally. In Africa, mainly you have EDGE certification, LEED, BREEAM, maybe HQ in the north, others that are more, let's say, oriented from where the regulation initially is coming from. You still have a gap in regulation also in Europe, but everywhere regarding green construction. So those voluntary schemes to give value to the asset and tends to help to actually build sustainable assets is something that EDGE has created for finance sector. So they really go for pragmatic. So currently is the cheapest certification in the market, the most pragmatic and the most adapted to sub-Saharan Africa context. The other ones are not realistic and a bit too ambitious. This one is really based on what's the performance in the country. IFC is conscious about the cost. They want to reduce it. Actually, we had recent conversation with them about reducing it. So they want to address volume, and this is something that will come, and they are conscious of it. But you don't have a cheaper certification, let's call it like that, in the market today from EDGE. It's the most pragmatic and the most volume targeted to emerging markets in terms of construction. But we can discuss after.
Go ahead.
And just to jump off the back of that as well, I think, so in as much as we require this in our projects, etc., we also understand there's that affordability question in there as well. So what a lot of developers and don't know out there is that there are a lot of technical assistance facilities that will grant fund this type of cost, basically. So as far as we're concerned, to the extent that we've got a developer who's interested and okay to go down that road, we can always approach our technical assistance facility to help fund that as well. So that's another way to try and address that. There a lot of the DFIs out there have these type of facilities that can grant fund those type of costs.
All right. So again, Tola, let's just stick with you. We've got urbanization as a result of migrative issues, conflict, water, etc. Right? Where do you see the opportunities within the context of that, and then also within the context of affordable housing? To put you on the spot a bit, not from an impact perspective, but from a return perspective, because I'm sure a lot of people in the audience don't have the privilege of having DFIs, so a little tricky, but what are your thoughts?
Yeah. So I was going to go back to that, and the reason I was going to go back to that is I think we live in a market now where a lot of people are chasing ESG type linked returns, basically. And affordable housing is one that can deliver that, right? We're talking about sustainable housing. We're talking about resilient housing as well to deal, I mean, with climate change. You've got floodplains to deal with, rising sea levels, all that sort of stuff. When we think about urbanization, we have to rethink how we build homes, basically, to take into consideration all these things. When you look at the funding side of things, there are investors out there who are looking for green financing, green bonds. So, for example, we've been involved in issuing, wrapping a green bond issuance in Kenya, for example, where Moody's ascribed a B1 rating to it, which is above the local sovereign rating at the time. So yes, those are the opportunities I would say, and unfortunately, yes, it does it does build in the sustainable development impact side of things. But I think from my perspective, the two are linked in the world where we are today.
Okay. Mostafa, I know you're more kind of North Africa focused, but similar question, basically same question. Where do you see, let's call it market returns?
Yeah, so honestly, I think when it comes to, let's call it affordable housing for the true, bottom echelon of society, at least from my experience and within the Egyptian context, where this has become a little bit more successful is when it got support, I think, from the World Bank and the IFC as well, in order to effectively subsidize what could be the interest rates. Again, given the highly inflationary economy, given the interest rate environment we live in, and I think many African countries are now 20+%, interbank lending rates, to put that on a consumer who's earning $100 a month and then have to somehow economically create viability for a house, I think as if there's no government social impact intervention, the financial ability for that to exist becomes limited. I think that the smart moves are how can government actually create financially viable products for the people who are going to go out and sell those loans. And we've seen good examples of those where effectively the mortgage issuer is getting sort of a commission or a kickback from the government on creating that mortgage, despite the fact that that mortgage is selling at below interbank rates. And that allows that to propagate. So some people are making money in the process, but it's not, it's very, very difficult to do that. Like you were saying, it's, some wizardry in terms of financial engineering in order for that to happen.
Julien, do you feel the same?
I guess, again, taking the example of Kenya, where you really have, the government made a not very popular tax bill in order to fund this program, the multi-annual program. But I guess you have to create a good environment to attract investors. But as you were mentioning, you will not be able to create a massive impact in affordable housing if you don't have contribution to public sector or governments and World Bank or IFC behind it. Then obviously, I guess you guys the expert in terms of profitability. If you go to the middle range, still affordable, that's where private can take it maybe by itself.
True.
But for really low income affordable housing, the intervention of government and international financing, it's a must, I suppose.
Okay,
I agree.
So if there are any developers out there, looks like to make affordable housing work, there has to be some form of government support. Go ahead, sir.
Yeah, I think one of the things that we forget also is the fact that a huge part of it can come from the private sector as well. Just saying something stupid, for instance, in Muslim countries, we have this thing that's called zakat. So it's actually like charity that you have to give away. There's actually no return that's expected from that. Is there a way to maybe see how you can aggregate some of those resources? Another source would be like all the remittances that are coming from the diaspora back into the countries. You could have like a couple percentage point savings in those, and then you can redirect that to those, because that's money that's not looking for any return. It's already fulfilling another purpose that's not an actual return. If you blend that to what the government and the public sector, the DFIs can provide, then you start lowering the cost of them. But I haven't actually seen or heard
No.
aggregate resources at that scale from the private sector?
In Egypt, there's quite a few NGOs that operate off of people's donations, and some of them are quite sizable, working in a similar space. But at the end of the day, it is effectively, truly just subsidized in terms of people wanting to create social impact. And these companies or institutions are non-profit by nature, so they are collecting donations and trying to create impact. Those do exist.
But also, I think zakat is a tax, right? Not a charity. So if we're to look at it from that perspective, perhaps Kenya introducing that 1.5% tax to go towards affordable housing obviously doesn't meet, what you have to pay on your zakat tax. But if it's used the way judiciously, the way it's supposed to, then maybe you'll see the direct impact of this tax, towards housing. Any other questions? Okay, so we've got about 10 minutes left. The next question is for Julien. Is in terms of how, and we've touched about this, how much is there a difference in the certification level that you guys do for kind of the upscale and mid-scale and kind of affordable housing, or is it the same thing irrespective of project type?
Yeah, so if you tie this back to the code of construction that you have, sometimes it's pretty old and not necessarily adapted to new construction approach. Mm-hmm. So it's a sector that's not been evolving much, and still when we're speaking about affordable is how you finance it, but also what's the real cost. Mm-hmm. So there is a lot of constraint, standards are not necessarily adapted, so there's maybe a way to create a standard for affordable housing. What is it? We spoke about definition about the price, yeah, but maybe what about the the specification, mm-hmm, and what's the minimum that's from a personal perspective, but also quality of construction. And you can also look at the materials itself, because again, there is a lot of stress on material, and we see a lot of projects that have been impacted by the several crises that we had, Ukraine, plus COVID, post-COVID, etc. So this has been impacting a lot of the project. We saw in the type of project we are working on delays to refinance, to revisit the finance of those projects. Mm-hmm. So to answer, to summarize, there is no difference between affordable housing to upscale. Okay. So there is maybe a way to create that and maybe back the finance around that to say this is the minimum affordable housing, this is the quality, this is recommendation on material, and this is the green aspect and the resilient aspect. That would be
all the same across the board.
That would be a great.
Okay. All right. Mostafa, how do you measure the impact of kind of your investments, properties that you buy? After you do the deal, looking back, what do you guys have in place? How do you do that?
So I think, we've only been around for, a limited amount of time in history of real estate. You need to look at much longer trends, and we've only been looking at things for like a year or two. But obviously what we've seen so far is kind of the customer satisfaction in terms of people actually being able to access housing, which they couldn't before, and that's almost immediate, and someone wanting to buy a house to live in, rather than not being able to afford that, being able to actually get in there. Mm-hmm. That's an immediate impact. Two is also the level of gains that these people have. So, we sold someone a property a year ago, a year later, how much has that asset actually appreciated by, and its value and the terms they took a year ago. And obviously all of those in this currently highly inflationary context always look very, very positive.
Okay, thanks.
And finally, sorry, the last part, and we've gotten this again qualitatively, when we've created the asset class for partial ownership, is people have sent us a message saying, thank you, God bless you, I couldn't afford to have an asset class like real estate. The maximum I could get was a small piece of gold, and now I'm a proud owner of a piece of a property, and I believe that's better for me. So it's pretty much still on the qualitative level in terms of the impact that we can measure.
Okay. For Tola, do you see collaboration between public and private, via PPPs or whatever sort of partnership, between these two sectors? how do you see that affecting affordable housing in either a positive or a negative way?
So I think definitely positive. I think, as we were saying earlier on, that some component of subsidy is required in trying to push affordable housing and making it happen. And this is where public-private partnerships can work quite well in terms of achieving that. And it's about finding the right structure specific to affordable housing to make that happen. But that definitely, it's definitely a way forward to try and achieve that.
Okay. Is there something that in the deals that you guys come across, I'm sure you guys get a ton of financial models, are there certain things that you see that are missing? It's like a recurring theme, and a lot of the models that you guys look at, they don't factor in A or B. Is there anything like that?
So one of the major, and we try to address that in a particular market. Again, it comes back to the whole affordability question. And you get models coming in for clients, and as part of that modeling, there is a general assumption that the target population can afford to buy out all the units, basically. And I think a lot of work has to go into, and this varies from country to country, trying to understand the underlying market, mortgage availability, and all those factors to try and see if those assumptions make sense, basically. So in one particular market, as I was talking about, what we found in that market is mortgage availability was sparse, basically. So what we did on that side of things was to partner with a microfinance house and help them raise funding with the benefit of our guarantee, raise funding at a much cheaper rate than they usually did. And then now the work is then between us and them to try and make them pass that saving on to the end user and make those mortgages a bit more affordable for them to be able to buy up these units that are being constructed, basically. But I would say the assumptions around that in the models is something we do see as an issue sometimes.
Awesome. So we've got a little under 5 minutes. Do we have questions from the audience? All right, so to my speakers, each person, a minute and a half or a minute and 15 seconds. What do you want to leave the audience with? Let's start with you, Tola.
Well, I'm sure I'm preaching to the choir, but I think affordable housing has a certain risk perception that I think is perhaps unmerited, and I think it just requires a bit more thought and creativity around how we make financing available for it, and I would encourage the audience, which I'm sure they're already doing, to further that thought process, basically.
Okay. Mostafa?
Yeah, so I think, I think many times we look to the West for solutions and things in Africa. And although I think many times we can be inspired by things that do exist in the West, often our solutions in Africa will look very different in terms of how we execute them. So when it comes to the novelty of financial models, I think we need to be looking at our problems in an African way, taking into account the final end goal, which may be to look a little bit more like the West in many cases, but take in, the problems we have, find local solutions that meet the ecosystems that exist, rather than wait for policy or government and infrastructure to match what it would take to solve the solutions we have, the problems we have in Africa.
Okay. Julien?
I guess, again, the financial part, you're a bit more covering, guys, but part of the equation is also what we're going to build in a way. And growth, most of the people that are looking for affordable housing, they're not necessarily looking at sustainable housing, but more resilient housing, and let's say growth comes hand in hand with sustainability and quality. So I think there is a lot to de-risk on the part of how we build, how we improve regulation around it, and how we manage to embed in this all the let's say sustainable model and resilient model in it.
So you've heard, you've heard from my panelists. What I'd like to add is, so Urban Shelter has been building houses in Nigeria for over 30 years, right? And so we have everything from affordable to the high end. Now, the affordable is the least profitable. However, that affordable product is there to create a relationship with a buyer, because if they like their experiences on that first house, as their incomes increase and they move up the social economic ladder, they're gonna wanna buy a second house. And if you treat them properly, they will come back to you to get that second house, right? So a lot of what we've heard is about kind of being creative and finding ways to do it. So some of it is doing it with the government, right? Some of it is taking a longer term view of, okay, my margins on this house are gonna be super low, in the belief that this guy is gonna come back in 5 years to buy a product where the margins are significantly higher. So affordable housing, difficult, much easier with government support, but with creativity, it's something that is doable, right? Any questions as we wrap up? Questions? That's the bell. Going once, going twice. All right, thank you so much for your time. Thank you, gentlemen.